All right, good afternoon, traders and ladies and gentlemen. Oh boy. Good to see everyone. Quite the day. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer, and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. The only update on the position disclosure from yesterday is I'm out of my PayPal long entirely. I see I have AMD written on there twice. But I am out of my PayPal long entirely. Alright, quite the day. Let's take a look at where we're at on our percentages. SPYs here are up 1.6%, Qs are up 2.5%, it's a big day, and the IWM is up 1.5%, so quite the day. Yes, yeah, I am. Little different time frames on those trades, but I am. So yeah, I mean, quite the update today. Sounds like maybe some people got caught off guard a little bit by it. I would say that the degree of the up move today is the bigger surprise to me, but the market today did exactly what I was calling for the last few trading sessions. And it's always a little bit tricky when you're coming into big events to try to then, say what the market may do ahead of the event. But broadly, my thought process has been I'm still not big picture bullish on this market. I'd like to be, but I'm not. Obviously, it made a lot of sense to be tactically bullish, as we discussed over a week ago on Monday, August 5th. It was an incredible opportunity to buy. And then starting on August 8th, when we had the Wednesday pullback from the ADMA to lows, but then on Thursday, we were able to basically negate the entirety of that candle and get back up to that ADMA. The fact that buyers step right back in so quickly led me to believe that we could overshoot to the upside beyond what market participants are thinking. And that in some ways, if we are going to go back down, that would be the best way to have that happen. We overshoot to the upside, we get everybody off sides, we get people upset that they didn't buy the dip, we get people starting to get squeezed out of their shorts, we get the chasers to begin to come in. It really felt like we were getting some of that price action today, and then maybe we potentially get a rug pull afterwards. So that's kind of where my head's been at. Now today we got the follow through to the upside to the area that I was looking for. An overshoot of the 21 EMA, even an overshoot a little bit of my expectations. I was thinking that, getting us up to 540 would be enough in the SPY to get us there, when in fact we got us all the way up to 542 today, which is just an incredible move. So we'll see. CPI obviously tomorrow. Whenever you have an economic event or a major macro event, it has the capacity to just spin the technicals around and cause you to reassess things. But I think so far things are working directly in line with my thesis. And we'll see. It does seem, and it seems to be a lot of the chatter today and speculation is, to what degree is today's move pricing in a soft CPI tomorrow? It's a little bit difficult to say. I still think that a lot of this is positioning related and chasing related. But certainly to some degree, it seems that we have priced in a little bit of a softer CPI compared to expectations just on this big of a ramp back up. But we'll see. I don't necessarily think that a soft CPI is a sell the news event either, though, which has also been some of the chatter. I kind of think that a soft CPI at this point maybe means more like range boundish action, or maybe it means that you get an initial pop to like 545, and if that happens, it's probably very shortable. Right now, the ADMA, as I'm measuring this, the ADMA on the daily chart's at 534. We closed at 542. We're actually $8 extended to the upside in the SPYs right now. So we're actually solidly in that no man's land to the upside. If we get an initial pop on a soft CPI, it'll get you not only $10 extended away from the ADMA, but it'll be a move from 510 to 545 in like a handful of trading sessions. So I do think that at this point, at least in the short run, any up move tomorrow is shortable. It's just a matter of the execution. It's a matter of what the number looks like. If the number comes in hot, we'll be down very hard, very fast. If the number comes in soft, I think there's a good chance that you hold in and range out, or that you get an initial big pop, and that big pop will actually be shortable just because of, once again, the extension. So I think the market's doing exactly what we were looking for. Anecdotally, I mentioned to you guys on this insane day back here on Monday, August 5th, that low, that morning my wife had overheard me doing the morning meeting, and she came in and bought stock that morning. And then she told me, I love paying attention to just this anecdotal evidence. And then she was just in like a regular, work meeting. She's not in finance or anything. She's not a trader, but she does, pay attention to markets and makes, I think, generally really good overall investment decisions in how she approaches building her wealth for the future. She was in a meeting, just a general work meeting yesterday, and she told me last night, she was like, oh man, a couple of the guys were talking about the market, and they were so upset that they didn't buy stock on that big Monday gap down, and they thought maybe the market could go down more and then they could buy, but they didn't buy. That's like exactly what I'm looking for when I'm talking about the market like overshooting here to the upside to get everybody back off sides, to squeeze out the shorts that are in there, to get some long chasers to begin to come in. I think we saw that today. And then obviously it depends a little bit on what happens with the CPI tomorrow and what the number looks like, but I do think it potentially sets you up for a little bit of a rug pull, for at least a pullback. And the pullback will be the inevitable pullback, which will have to happen at some point. I mean, maybe I'm wrong and we get to 550 before that pullback happens, but I do think that we will be seeing a pullback at some point. The pullback will be the real test, I think, of the market, because this up move here, we haven't really had any higher lows in this up move. It's kind of been straight up. You can make an argument that the pullback here on the Wednesday, August 7th, creates a little bit of a pivot low to create a higher low, higher high pattern. But for the most part, this market has just gone straight up for $32 here. So it's really into today, really into this up move today, as my kind of thesis of over pushing the upside is playing out, that I much more aggressively neutralized my portfolio today and really pared down on some of my long risk as I really added into the short exposure, which is my plan. You got to keep in mind, I saw a couple people, I saw, Jim mentioned, and I'm sure you're not the only one, that you were really trying to short at certain points today, and it was very difficult. We have to keep in mind that we're still in an environment right now when you've got gamma near zero, or back when gamma was negative. We're still in an environment right now where the intraday moves that we're seeing are very hard to fade. It's not like where we were in June when you had so much mean reversion in the SPX on a day-to-day basis. So you just got to be, conscious of the evolving market structure that creates the trading environment that you're in. Because, and I mentioned it, I think pretty quickly, but probably not quick enough, back on like the 7th or so, about how this market can just give much more intraday follow through. Because I remember there was a day, it probably was that the 7th here, where I was able to put on some nice long scalps over the course of this really big down move and make a few dollars for myself. And then I was thinking about it after the market closed that day. I was like, all right, cool. I was able to make a few dollars by really picking my spots and coming in on the other side and putting on some long scalps. But in fact, looking at this chart and recognizing that we had, negative $2 billion worth of gamma at that point, the smarter move would have been to just consistently short the pivot highs and press them, because we are in an environment right now that's not set up for mean reversion intraday. We are in an environment right now that is set up for continuation intraday. So for me, I did short the entirety of the up move today with the IWM and with the TQQQ, but that was specific to a game plan that I have. I always say, broadly, when you're kind of doing things counter trend. First of all, it's easier to do things with trend, especially in an environment that sets you up for bigger with trend movements like one that we're in. But when you are doing stuff counter trend, you got to either really make sure that you pick your spots and then take some size and stop yourself out quickly, or have a major exit game plan for if the move's not moving in your direction, or you need to be able to give yourself the room to slowly build in. So for me, the market today perfectly met my expectations, but I'm using that as an opportunity to slowly build into size on the IWM short, on the TQQQ short that I have on, while slowly selling the longs that I have, to only by the end of the day here, and I haven't done updated math at the close, but only finally at the end of the day here am I actually starting to get a little bit more market neutral with my portfolio, where the sizing of my IWM and TQQQ positions is finally starting to equal out on the other equity long exposure that I have. And again, that was exactly what my game plan is. So we'll see what happens tomorrow. My thought process, like I already explained, we have to see what the CPI is. You can never know ahead of time. But I am thinking that a weak number really means that we sell down, and probably sell down hard, just because of how big of an up move that we have had into it at this point. And I'm prepared for that. I've got these shorts on. And at the same time, if we get that initial pop, we'll be so extended by that point that that's where you want to be shorting the extreme extension anyway. You'll have upside extreme extension, where I'll use that as an opportunity to further piece out of these longs that I have on, and to size further into the shorts, just because that's what I like to do into periods of extreme extension. It's worked very, very consistently pretty much every time we've hit that $10 plus worth of extension in the SPYs and Qs. Coming in on the other side has paid me with almost a perfect track record over the course of the last couple years. So I think that's where we're at with the market. PPI number coming in light today, and I read another note that got into the internals a little bit of the PPI that talked about how it was pretty Goldilocks, about how it showed services coming down while goods staying stronger, which I think is exactly what you want, because the services part has been where the inflation's been a little bit stickier, and goods and retail and things like that are a little bit more concerning from an economics perspective, where you don't necessarily want those numbers to be coming in too light. And that was almost one fear that I had, by the way, when I saw that the PPI actually came out light this morning, when we have come into an environment now where the market has become more concerned about recession. Was like, I know, PPI, CPI coming in light is great for inflation. That's such a big theme for this market. Is there a chance at a certain point the PPI could be so light that the market reads through that as slowing economy, and that we're not able to be strong? And then when I saw that note of the internals of the PPI being more services creating the light PPI number, and actually like the goods aspect of it potentially coming even a little bit hot, I was like, oh, that's actually like a Goldilocks PPI. That's exactly what you want to see. So anyway, we'll see what happens tomorrow, but so far into this bounce, as far as I'm concerned, it's kind of perfectly matching the game plan. And now we'll see if we get the follow through of that game plan, which in my mind has been, for the last several days, I've been thinking we overshoot to the upside, push everybody off sides to then create the rug pull. But obviously, just now I'm repeating myself, to what degree that potentially happens depends on what the number itself actually comes out to be. So that's what I'm thinking. As far as my trading goes today, for me personally, I was pretty much 100% just focused on the game plan for the open positions that I have. I think if you can nail the macro, then you can nail the individual stocks. That's what I keep talking about. That's what I was talking about on Benzinga this morning. Correlations have really increased. Though I did watch a YouTube video from Spot Gamma this morning that compared these increasing correlations to where we are in terms of history. And in terms of history, we're actually not like super correlated yet, even though I think if you're comparing it to how the market was trading in June and July, when there was, the IWM and Qs were trading literally opposite to one another, um, correlations have obviously increased. Everything's trading up together. It's just a matter of the Qs are kind of continuing to be relatively strong. If you look at the SPY chart, obviously we overshot the 21 EMA now, got above 540. If you look at this QQQ chart, the spot we were talking about with the Qs was 560, where the 21 EMA is, and there's a little bit of a level there. They overshot that as well. We're in these low 560s, so overshooting the 21 EMA. Whereas this IWM still really hasn't lifted its head above the 80 EMA on the daily chart. So correlations have increased and these markets are moving together, but there's relative strength and relative weakness out there. And the IWM is definitely disappointing in this bounce, where you look at the SPYs and Qs above the 21 EMA at this point, and the IWM itself just to the 80 EMA. I struggle a little bit to put my finger on the why behind that, outside of the fact that we're outside the buyback window. We're outside the buyback blackout window, I should say. So you've got Mag 7, Apple really turning on their buybacks, and I saw some stats I think this morning that showed that corporates have been buying back their own stock at a rate that's faster than they typically do for like this time of the year over the course of this past week. So maybe that is more positively impacting the Qs. Also, I don't know, a little hard to say with this IWM and interest rates, because I feel like we've seen that relationship flip-flop back and forth so many times. That's all that I've got. I think it's a good kind of comprehensive update on today's action and where we're at on these daily charts. Like always, I am happy to answer any questions that anybody has. Department of Justice mole seeking Google breakup after landmark antitrust win. Yeah, Google was very relatively weak today. Looks like it just dropped a bit over $1 on that news. All right. What questions you guys got, folks? It could affect Apple as well. Yeah, Apple down 50, 60 cents. Actually, no, a little more than that. 70 cents after hours. Anybody have any questions at all? Anybody have any questions on what they traded today, how they traded it, anything that they're struggling with, market psychology, trading execution, anything like that? I'm happy to answer it. Rex has asked me why I got out of PayPal. Just because it got to my target. That's pretty much it. Really, my target was 66. But in the interest of kind of the big picture risk management that I was talking about ahead of this CPI, piecing out of longs a little bit more aggressively. My last offer for my last piece was supposed to be basically right in front of 66. So I've been selling this on the way up in 50-cent increments. So I sold some at like 65.50, and then I just liquidated the position above that 65.50 instead of actually waiting for the move to 66. That's pretty much exactly it. Pretty much exactly it. From Michael, do you think that the Iran Middle East stuff is already priced in? Really good question. Really hard question to answer. Obviously, what that is going to affect probably the most and most immediately is oil. And when you look at this move here in oil, it makes you think that they're pricing in at least some degree of a increase in the Middle East conflict. It's hard to say because I think some part of that depends on just how if Iran decides to attack Israel, how aggressive is that attack? What does that attack look like? I think has a big overall effect on the answer to your question, and obviously we don't know the answer to that. It continues to be something that I'm keeping in mind in the back of my head as something that can break this market a little bit, but based on my experience when it comes to these war situations, and it's interesting because now we've rallied so much. Typically, the worst part about it is the anticipation of things getting hot, and then once the um, uncertainty of it is over because it started, typically markets actually breathe a sigh of relief and you catch a bid on it. Again, I often cite, because it's an example of recent history, the Russian invasion of Ukraine in 2022, where we knew it was coming, and they sold the market down heavily for like 4 or 5 days into it, knowing it was coming. And then when it happened, the market gapped down massive that day, and that was a big bottom. That was a big short-term bottom within the confines of the bear market of 2022. But it was like as soon as it started, it pretty much stopped actually affecting the market movements. We got the big move higher in the market, and that was it. Yeah, I think, and the 2003 Iraq War was a little bit before my time, but my market, yeah, my general market history knowledge, I believe, cites that as another example of the exact same thing happening. So the interesting thing is, it seemed like the fears on that were highest over the weekend into the gap down on that Monday. It was just one extra thing that caused this really large gap down, right? It was a whole confluence of factors. It was the yen carry trade. It was the kind of maximizing of those Middle East tensions at that point. Is Iran going to attack? It was the Warren Buffett selling of Apple. It was negative Nvidia news. All that hitting at the same time really combined with the most important factor, what positioning looked like going into that Monday to create that massive gap down. And now, I don't want to say the market's forgotten about it, because I don't think that that's true, but the degree of the rally here, as nothing has happened, has been impressive, to the point where maybe, depending on what that action looks like, it triggers some sort of a down move. But I don't think, unless, I don't know, unless Iran gets nuclear or something, or has what is perceived as such an overreaction that it begins to create like a world war, I kind of don't think that if we saw an attack happen tonight, that I would wake up tomorrow and see SPY 510. Obviously, you never know specifically what that attack could look like, but that's my general thought process on it right now. Do we know why VIX products aren't shortable, or as a rule they are not shortable? I think the VIX products are shortable. UVIXI shortable. It's just hard to borrow. You always have to pay for a borrow on it. VXX is also shortable. You just have to pay to get a borrow on it. It's not easy to borrow. And then you've got the inverse VIX ETFs, which I don't remember what any of those symbols are because I don't trade them, that you could also buy as a proxy to get short without having to pay for the borrow, but then you're long the decay. SVIX and SVXY are the inverse ones. Thank you, Bill. And Joanna, it's probably not your settings. They're hard to borrow, so you have to claim the borrow. You have to request the borrow, get a price quote on it, and choose whether or not you want to pay. And if you're on Lightspeed, which I think you are, the way you can do that is in your top box. And I can't really show this without actually. I think I can hide my P&L and show this. How do I do this? Shift S, is that? Yeah, Shift S. I just hit my P&L. It's not really letting me show. Hold on, let me try something else. Yeah, if in here you go to new short requests, there it is. I still have the VXX up. So you click on that. 100 shares. How much is it going to cost for 100 shares? 2 cents or $2. If I press accept, then I just paid for that. I just paid for that 100 shares. So even if you don't use it, but you press accept, you pay for it. But that's how you, if you're on Lightspeed, which I think you are, you can get a quote and potentially get a hard to borrow stock. And then the way that you see that something is hard to borrow if you're on Lightspeed is it has this gray L here. If it's got a green E, it's easy to borrow. If it's got a gray L, it's hard to borrow, and you have to go through the short request process that I just showed on my screen share. Hope that helps. All right, from Jim. Super frustrated about tilting on short today. I make the same mistake probably once a month, and I'm aware of it. That's a big start. Being aware of it's a big start. I'm catching it sooner. It's also progress. I like progress, but still, it takes a decent chunk of my P&L. These sessions are responsible for greater than 50% of my losses. Do you deal with any reoccurring issues that you have worked around, and how did you game plan for it to minimize the damage? This is some of the hardest stuff about trading, Jim. This is some of the hardest stuff about trading. I don't really have anything like that for me currently, but I've definitely had things like that, what you're describing, at various points over the course of my career. You know, we all have these like imperfections as traders. And you know, for me, for a long time, it was for my emotional control. And you know, I've spoken about that previously, and kind of how I worked to get through it. But like those biggest weaknesses that we have as a trader, and this sounds like yours, are the things that, because they tend to be like ingrained psychologically into what we do, and you just like I don't even know how to properly describe it. I know the exact feeling of what you're talking about, and it almost feels like you're an addict. I don't know how else to describe it. It's like I can't not press this button into this up move, and then you know you do it, and I'm actually the same way. I'm naturally aggressive. I used to be a professional fighter. Like I want to fight stock. It's my natural go-to is I want to fight stock. So what you're describing is already progress. So you're on the way. And I find from my own experience that those things that are our biggest struggles as traders really are things that take 5, 7, 10 years to like fully conquer. And over the course of 10 years, you're like a totally different person also. You know, I'm a lot more mature than I used to be in my 20s. I have a much less temper than I was in my 20s. I'm a lot more experienced also, just because I've been doing this for so long. That enabled me to make the progress. But you know, it's about game planning, and journaling is a big part of it. You know, heavy journaling whenever you find yourself falling back into those bad patterns. And progress is in recognizing it earlier and doing it less often. Progress is not all of a sudden your biggest weakness as a trader is gone tomorrow. It's recognizing it earlier so that you can take a step back, or have the damage be a little bit more limited from it. Recognizing it earlier and having it less often. And having it less often is because you did it today, and you're gonna, not to get off topic, I think that this is a difficult business that we're in, and it's very difficult, I think, on our psychology sometimes. And you have to know the difference on when it's okay to beat yourself up and when it's not. Because I think that being really hard on yourself can have positive effects, but it can also have negative effects on your overall trading kind of psyche moving forward. I think for this example for you today, Jim, you should be hard on yourself about it, because I think that will reinforce even further that you cannot allow yourself to make this mistake anymore. even if you probably still will again at some point in the future. But by being really hard on this, on yourself on this, it can hopefully ingrain in your brain that this is not going to happen to me again in the future, which means that instead of making this mistake again in a week, you only make this mistake again in a month. Or instead of making this mistake again in a month, you only make this mistake again in a quarter. And again, that's progress. Being aware of it earlier and having it happen less often. So for you, I think you should beat yourself up a little bit on it today, but tomorrow morning, you know what the mistake was. You want to beat yourself up in such a way that it doesn't damage your overall confidence on the things that you do well, is I guess the point that I'm trying to get across. So tomorrow morning, after you beat yourself up a little bit about it today and tonight, you say to yourself, all right, yesterday happened, it's over, there's nothing I can do about it. All I can do starting today is to do the right things consistently over time and follow my game plans. And then if you do that, I think it's constructive. You beat yourself up about the right thing to make progress on that right thing, but you didn't beat yourself up to the point where you're hurting your confidence, where you're not going to be able to do the right things going forward. That's kind of the balance that you need. So I hope that helps. I've definitely been there. I understand it. And part of it also, I do think, is as a trader, and I'm not saying that you, Jim, need to do anything different, but as a trader, so why is it, and again, this goes back to what I spoke about in Vegas last year, and I'm probably going to speak about it again in Vegas this year. How come it is that I could take two traders and have them trade the same strategy and have one of them be super successful and one of them be not successful? You have to find the strategy that works for you, for your personality, for your personal strengths and your personal weaknesses. And for me, I developed and evolved my strategy to some degree around what my weaknesses are, which is I recognized that I would lose control of my emotions and I would go on tilt and I would start trading very poorly when I was doing a lot more like hyper scalping with tight stops and things like that. And I was disciplined with it to the point where I could make money, but then, you know, I could have one day that ruins everything because I could just get totally undisciplined as I became enraged by whatever thing was pissing me off that day. My approach has evolved now over the course of the years, where I don't trade in such a way that it, you know, and this is not to say I'm a perfect trader. I'm not. I definitely make mistakes. I have bad days like everybody else. But I've been able to evolve my approach in such a way where I'm not like as my approach doesn't set me off. I don't know how else to describe that. So that's kind of also something to keep in mind, is maybe you want to make sure that your strategies and your approach as a trader are evolving in a way that suits your personality, because doing so will enable you to be the best trader that you can be. Great question, Jim. Can we continue to overshoot if the VIX keeps selling? Sure, why not? I don't have any second level thinking on that one for the moment, though. Sometimes I can get into a deeper answer, and sure, I think if the VIX continues to sell, then there's a good chance that this market continues to grind up. But I think at some point on the way down from 65 to 12, we gotta at least attempt to make a pivot low in the VIX, and that's what I'm saying. Is I think that the real test for this market happens into this first pullback, which probably means that the VIX does the opposite. At some point here, we get a bounce back in the VIX. That is the real test there as well. Does the bounce back lead to a lower high in the same way that the pullback leads to a higher low? I think it's a little early to tell. I'm still broadly nervous about this environment, to the point where I wouldn't say that I'm bearish. You know, I keep saying to you guys, like, I'm tactically bullish, but I'm not big picture bullish. I'm also not really big picture bearish. I'm like big picture thinking that we can have wider ranges now because of what the market has done, but that we're in an area here where we should expect enough weakness to be able to come in and enough supply to be able to come in that we can't just get right back to all-time highs in August or even potentially in September, but also that without a catastrophe, that we're not going to just immediately break this 510 either. So I wouldn't be surprised if a pullback here that creates the higher low then eventually leads to a sloppier market with wider ranges over the course of this election cycle, seasonal weakness kind of period that we're working our way through right now. From Jeremy, do you know why my short request said E04? That's a quick error that sometimes I get that too. Usually if you log off and log back on, it fixes it. If you find that you log off and log back on and it doesn't fix it, email the trade support team at tradedesk@t3trading.com. What platform do you use to journal? So I started journaling before journaling software for trading existed. So forever I've just used Microsoft Word and Microsoft Excel and kind of built it out myself. Nowadays there's all sorts of trading softwares that people use for journaling. I can't suggest anyone to you because I don't use it, but I'm sure that some of the other folks here on the team do and maybe have something that they can suggest to you, Harrison. From Sylvia, been there. I would suggest telling yourself I could get a better price if I wait. Okay. Thank you, Sylvia. So that's some advice back towards Jim, I think. From Austin, I was trying to research net gamma the other day, and I read that very basically in a net positive gamma, dealers buy into buying, and that has a stabilizing effect. It's the opposite. They buy into selling. So when the market moves down, dealers are buying when there's positive gamma, so there's a stabilizing effect on the market. When the market moves up, the market makers are selling in order to stay hedged. So dealer, Bill just put it right here. Positive gamma means that dealers are buying dips and selling rips. Negative gamma means that dealers are buying rips and selling dips. Maybe copy paste that somewhere. So again, positive gamma environments tend to be mean reverting. So when the market pulls back, there's a higher probability that that breakdown that you're looking at fails and bounces back, or the breakout on the upside that you're looking at fails and the market mean reverts back down. There's a higher probability, and again, it's always probability because you can get a situation, especially when there's a news event, where you're in a positive gamma environment that is overwhelmed by the event. And then there's degrees, right? There's dollar amounts that we can put beside that gamma. We just in July, I think it was in July, somewhere in June, July, I forget the exact date, we were at the largest amount of positive gamma that the S&P has ever seen. I don't remember what the number got up to, 15 billion, 18 billion, something like that. Historically, from my experience, anything above 5 or 10, it becomes a really big environment for mean reversion. Negative gamma in the market happens much less often, but when gamma flips negative, which is what I was just kind of talking about a little bit earlier with Jim, because now we're at like kind of zero. When gamma flips negative, you have market environments where trends tend to give further continuation. So we flipped from, I think it was July, where we had the largest positive gamma on record, to into this down move, Monday, Tuesday, Wednesday last week, where we had $2 billion of sell, of negative gamma. So that just means that buyers are buying into up moves and sellers are selling into down moves, and you get wider ranges and exaggerated movements on both sides. And then one of the ways in which we were able to successfully call this down move in the market in July, there's a couple reasons that all came together. But one of them was the timing of options expiration in July. Because whenever you get options expiration in those positive gamma environments, you see a lot of it roll off. So then the market can be much more affected by event risk, basically. So I hope that helps. I hope that helps. No problem, Jim. Answered Harrison's question. From John asking me about my idea of the market kind of getting sloppy on if it's would be a megaphone pattern. It's hard to say at this point. A megaphone pattern is an expansion pattern. I would tend to think that it's more of a wedge type pattern that builds out, which would be the opposite. And that actually would be bigger picture bearish, because it would mean that in a wedge pattern, more likely your realized volatility is coming down, which then can enable the systematics to come back into buy mode a little bit further. But let's take it one step at a time. Let's start by getting through the CPI tomorrow. Scrolling through here. Yeah, I get it, David. I definitely get it. Some of that stuff takes so long to really wrap your head around, but just keep reading Pat's note every morning. I think that's like the best starting point to learning more about these market mechanics is keep reading Pat's note every morning, and it's really where you'll find a great summary of most of that information fairly often. Today was Tuesday, right? Yeah, Tuesday morning is usually when we get the Goldman CTA update. Pat that had that in his note. So, and then I myself, I think, posted really early this morning into the VTF an updated chart of the gamma level in the market. So we do our best to get the information out there. Yeah, and off Bill's point, that's really become a big part of my overall trading edge at this point. It's combining what I've already known in terms of technical analysis and psychology and everything else with market structure, because like I keep saying, I think that market structure to some degree is technical analysis. I think it's the same thing in a different form, and in some ways it's even clearer, right? When you're doing technical analysis in the market, you're studying supply and demand to try to identify what buyers and sellers have done previously, and therefore what they are most likely going to do tomorrow. You're studying supply and demand. But understanding market structure is also studying supply and demand. But the cool thing about it is that really smart people with really good models can even just tell you what the numbers are for the most part ahead of time. And then, again, it's not perfect, like I said. You can have events or situations that overwhelm some of what that market structure would otherwise provide, but it's a great overall tool and additional piece of information to pay attention to. All right, over in the YouTube from Uvixible, I know that a 15-minute time frame beats a 5-minute later in the day, but when looking for the short today, should I have started on the 15-minute instead of getting a bunch of false signals on the 5? So it looks like Uvixible on the YouTube had a little bit of a similar situation as other people of trying to short this move. I think that so even post 11 a.m., 10:30 a.m. when the 15-minute becomes more important, I look at them together. Is really what I do. I still look at the 5-minute, but I look at it in conjunction with the 15-minute, and then I think that by looking at them together, it can make you not as rash just to hop into a short on a 5-minute signal in the market. And again, I would still, as I pull up this 5-minute chart of the SPY today, market structure is so important, just going back to what we were just talking about, because in a more mean reverting environment, I'm just looking at this shooting star through 540 in the SPYs at 12:25 p.m. today. that in another environment would be a much better short than in this environment where we've just been in a situation where these trends are able to really continue intraday. Hope that helps. All right, cool. Approaching 5 o'clock here. Anybody else have any other questions? Otherwise, I'm happy to wrap it up for the evening. All right, gang. Have a great night. Tomorrow morning, CPI. Get a good night's sleep. Buckle up. It's probably going to be a wild one. We'll see what happens. I'm speaking at the Traders for a Cause event in Las Vegas in October. I forget the exact date off the top of my head. I can look it up for you if you want. October 11th, 12th, 13th is the weekend. So that's it. I'm not sure I understand your question, Harrison, but you can shoot me an email on it and we can discuss. All right, guys. Have a great night. Oh, cool. Hope to see you there. Have a great night, everybody.